Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, July 26, 2019. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice that price continues to trade, generally speaking, within the boundaries of this developing box. You also notice that yesterday in the pre-market video, price was trading above the 30-20 level, and I mentioned keep an eye on 30-20 because any failure to hold that zone could begin to rotate prices back down within the range, likely back toward 29.80 over the next 1 to 3 days. Overall, this market continues to trade sideways after a very bullish June, and that is to be expected. Look how wide the trading range or the pivot range was for the month of July. But again, the market is also building out ahead of the FOMC meeting that is approaching next Tuesday and Wednesday. We get the federal interest rate decision on Wednesday afternoon, and that'll give us another FOMC key level similar to the 5-1 meeting and the 6-19 meeting. That's going to be very important and could finally spark or trigger some movement out of this range one way or another. Again, continue to watch the 29.60 level. Any failure to hold that level could begin to rotate prices back down within the range. Here's a look at the NQ. You notice the NQ continues to also trade mostly within the range here. Again, prices were trading just above the range over the last couple of days and is trading right at 8,000 at the moment. Again, a failure to hold above 8,000 could rotate prices back down toward the 77.90 level, 77.80s. You see the key level down here, which is the 77.40. That's the LVN. That's the kind of the breakdown point, 7,800. That zone right there is the zone to watch for a break to the downside. But at the moment, we've been seeing higher lows, higher highs, and we continue to see a very bullish trend here that could continue to persist again until that FOMC meeting comes out. So overall, while we do have a very narrow day trading range today so far, heading into RTH, only 34% of normal, we could see that range expand here today. Keep an eye on 7,900, a failure to hold 79.90, a failure to hold 79.90 starts to open up a little bit more weakness to the downside here today. All right, taking a look now at crude oil. You'll see that crude oil continues to develop a very narrow range here. We have 3 days of compression on a 5-day range basis. We now have 1, 2, 3, 4, 5, 6, 7 days developing here of compression. So that means we can increase this up to 6 or 7. 6 is the recent finished range calculation here. So you can see on a 6-day range basis, still very narrow. 5.5 points would be the breakout point, at least if we get a breakout. And so from current levels, again, if we were to drop just from where we are, 5.5 points would take us down to about 51s here, the recent lows. If we were to break to the upside, 5.5 points takes us back to about 61 to 62. So again, we continue to develop this expanding range. We continue to see energy being built up here in this 5, 6, 7 day range. And you know, it's hard not to see that prices are failing to hold above the 57s. Every time it's gotten above 57, it's been pushed back down. Yesterday, I think the high was 56.98 or 56.99. So again, that's right off those 57s. So this is an opportunity here to see if we do break through those 55s, because through 55s has clear air to 50 to 51. And right now, everything's kind of flowing to the downside. So the downside break is becoming a little bit more probable here as this thing fails to hold above 57s. Very narrow, tight compression. And remember, compression leads to expansion. Anytime you have narrow compression like we saw here, we tend to see expansion. And that's what's on the deck here for the next move coming. We could see a nice 5 to 7 day move once this range sees a breakout. All right, let's take a look at, lastly, gold futures. Gold has been trading nicely higher this entire time. In July, it has been range bound, as we knew could be the case after a very bullish June. Overall, it has continued to hold inside the PIMA trigger zone. However, recently the 1430s have provided quite a bit of resistance. Price has not been able to hold above 1430. We've been watching that level for 4 or 5 days now in the trading room, mentioning it also in the pre-market videos. Yesterday was a failed new high above that zone, and generally speaking, the 1430s have seen little to no action above that level. Every time it's gotten to it or through it, it's been rejected very quickly. The lone time where it actually closed above it was about a week ago, where price did close above it but quickly saw a snapback below that zone. So perhaps 1430 and a failure to get above that zone is opening the door to the potential to rotate back toward this lower LVN here. So that's going to be something to watch. If we bring this back over here and let's see, let's grab this indicator here and make this a 4-day range right now. On a 4-day range basis, we are compressed. You can see right here, very clear compression, and if you look to the right over here, it's about 46 handles of range right now. So 1, 2, 3, 4 days of compression. A 5-day range compression is developing. It's sitting right on the previous month's close. So again, if there's a failure to hold this zone, we could see about 40 to 50 handles of movement very, very soon, and that could take us right down. So from 1420, that can take us right down to 1370 to 1380 for a test of this LVN. And again, if we hit that LVN, it would be a great opportunity to buy it for a bounce back up toward recent highs. So right now, very similar to crude oil, seeing quite a bit of resistance on the top end of the range. So perhaps it needs to flush some stops before it can bounce. Alright, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well. Please be sure to like, share, and subscribe. Have a fantastic Friday, and I will see you in the trading room. See you soon.